Getting into the week, hello and welcome to a fresh new edition of Bazaar Morning Call. It's a Tuesday morning. I'm Prashant. With me, my colleague Sonia and Nigel. Guys, hi, good morning.
Hi, morning.
Things are looking a little down and out once again as we start this session. Nasdaq is down about 1%. These are cues we are waking up to. We have the dollar index, which is rebounding. That's a unfortunate outcome, but it's up 1%. You want it down, not up, but it's back at almost 108. And oil, actually, that is the big story. It saw a large drop and a big rebound as well, but essentially it ended flat. So Exchange Nifty, reacting to all of it, which is up about 50-odd points, 18,255. That's about a 0.25% higher. Yesterday was a poor session. The market did drop. Today it's indicating that at least right at the word go, it's going to be a higher start. Will gains stick? What's the trading strategy? That's the point of discussion here, as always, over the next 60 minutes or so to market opening. Guys, hi.
Hi, morning Prashant, morning Nigel. And there are some headwinds on the horizon, right, which is keeping the market from hitting those all-time highs. You can see it on the screen. There was the first COVID death that we saw in China as well. Demand is getting hit there. And for our own markets, it's reflecting that. Markets have been down for the third straight day. Yesterday, the Nifty slipped below that 18,200 mark. But the big headline globally is what's happening with crude. And although it is important from an oil importer standpoint, it just goes to show that there are huge demand concerns, specifically because of what's happening in China. And that's put pressure on prices, $87 a barrel on crude. So now it's a fall of 12% in the past 11 days on Brent crude. And that's not a small fall. It is a pretty steep fall in such a short span. It's also because, of what's happening in China, as I said. Beijing has now shut shops, they've shut schools after the COVID death. That has raised concerns about demand as well. And there are some talks of the OPEC perhaps discussing an output increase, which they have put on hold as of now. So those reports have been put on the back burner. But nevertheless, this is the way the crude game is moving because of that, because of all this news flow. It's also the second straight day of FI selling in our own markets. So just keep that in mind as well. FI sold about 1,590 crores. So I think it's still a way off before we get to those all-time highs, about 400-500 points away. There is, of course, this global hurdle. There's the fall in crude that we're seeing. And all of this, maybe we'll have to buy a little more time before all-time highs.
All-time highs, but also be mindful of the downsides, Sonia, because, the texture has deteriorated a little bit over the last couple of sessions. But I'll start with oil because, the closing is not the story, and it's actually an incredible story, but a fall story at that. What I'm referring to, I'm talking about the Wall Street Journal article last night, which basically said that OPEC Plus is going to increase output. That seemed odd and strange because all this year, OPEC Plus has been sort of talking about cutting output. They have cut output. And here's a story which said, well, they're going to increase output. Oil prices fell $5. At least I woke up this morning. I saw that story last. Oil was down $5. I woke up this morning. It had gone up $5, recovered $5 because Saudi Arabia, which is an OPEC member, one of the largest, the most powerful, said, well, it's false. There's no plan to increase output. That's the swing we're talking about. And that's oil, Brent oil futures we're talking about. So which is back at 88. We would have liked it at 82, which was approximately the low. That would have been a big thing, but it's not. It's back at about 88 where it was yesterday. The dollar is the other one, right? It's not staying down. You want it weak, but it's coming back up. It was up about 0.9%. It's back at 108. For the bearish trend in the dollar to kind of sustain, which is the kind of outcome we want, technically speaking, the index must stay below 109.29 kind of area. So we are, under it right now, but let's see if we're able to stay under it. Now, straight to the market here, the Nifty's 20-day moving average is at 18,079. With the open, it puts more distance between where the Nifty will be, today's open, and where the 20-day moving average is. But, to my mind, now that is the support. Which you need to kind of watch out for as you go along. On the Bank Nifty is still above the swing low of 41,965. This is the level I put out yesterday as well. We almost got to it and then we kind of bounced off it. The 20-day on the Nifty Bank is at 41,662. So again, about 1,000 points away. Banks, of course, have been the stronger part of the market, and within banks, it's PSU banks, right? You had Union Bank, Canada, Bank of India, all up between 5 and 10, 12% yesterday as well. Broader markets are under pressure too. And just to use the example of the Nifty 500 index, that yesterday closed below its own 20-day moving average. these are short-term, meaningful reversal levels up and down, but the Nifty 500 closed below its 20-day moving average in trade yesterday. So, I mean, this is the point we've been making the last couple of sessions. The texture at the margin has been changing a little bit. The alternate thought process is that the market kind of sucks everybody in to say, well, you know, this is it. There is hesitation. Maybe the market pulls back and goes down a little bit. And then, well, everyone is into that thought process. I mean, it makes a dash higher. We'll see. It's still early days. It's just been, what, 4 or 5 days that we've come within 1% of this all-time high, and then the hesitation started. So I think today will be important in that day. How does the market react to what are essentially not very positive global cues, with the dollar higher and US lower once again? Nigel, what are you watching?
Well, what about the morning in Mumbai? Beautiful, right? Yeah. Lovely weather early this morning. I mean, besides the queue is...
last few days, the weather has improved. There's a nip in the air, right?
It's amazing. And the FIs, I think they've already gone on vacation, just going by their volumes. But let's focus on the queues this morning. Well, the uptrend on the Nifty, that's intact. But the broader markets, they need to catch up, because portfolios, they look good when the broader markets do participate. And we're down for the third straight session, but I'm not so worried, because the uptrend on the Nifty continues to remain intact. Yesterday, the problem was we didn't see any recovery. We're so used to seeing an intraday recovery. And the institutions, they turn net sellers. So I look at both those two numbers together. That's the FI and the DI numbers together. But further looking into it, the gross volumes on the FIs, well, they were 40% lower in comparison to what we have seen on an average in November itself. For the sixth straight session as well, the breadth of the market was in favor of the declines. And that's a little bit worrying, because, you know, we haven't had more number of advances in comparison to declines all the way since November 11th. And you'll want that to, at some point of time, you have a couple of days at least where you have more number of stocks advancing than declining. You'll see that chart comes up for you on the screen. What are the FIs doing in the F&O market? They unwound some long positioning. So lower participation in cash market and unwinding of long position is what we saw from the FIs in trade. And that's why we did end lower. The problem is they're writing calls aggressively. Yesterday as well, 50,000 call contracts is what they wrote in the ratio of around 3:1. And it appears there was big open risk built up at around 18,200 call, at around 18,300 call, close to around 1 crore shares added between both those two strikes. And the put writing we were seeing at around 18,300. That's moved down to around 18,100. So plugging in these numbers then, the near-term resistance, well, that's around 18,300 to around 18,350, going by the call writing that we've seen. And on the downside, since we're seeing 18,100 puts here, a good amount of open interest built up, well, that 18,050, which coincides with the 20 DMA, becomes a crucial support zone. For the time being, SGX Nifty suggesting a bit of an uptake of around 50 points. I think if you get a bit of a dip today, yet again, the uptrend is intact. 18,050 odd, 18,100, that'll be good entry barriers if you get there.
Okay, so we'll watch out for those key levels. But for now, the SGX Nifty is quiet, actually, not doing too much this morning, up about 23 odd points. But a lot of stocks in focus, so let's get straight to that. First up, we have some opinion coming up for you from Sunil Kaul of Goldman Sachs, who says that as 2023 unfolds, they think Indian equities are less likely to outperform for the third successive year, as China and other globally cyclical North Asian markets, notably Korea, could perform better on China reopening catalysts and global recovery expectations in 2024. While they remain bullish on India's long-term prospects, high starting valuations and near-term cyclical considerations prompt a market-weight stance to start the year. They remain overweight on banks, insurers and investment cyclicals like industrials, cement funded by Infotech, NBFCs, durables and utilities.
Well, this is a view on money markets and the rupee. HDFC Bank's Bhaskar Panda says US markets were stable as some of the central bankers are calling for smaller rate hikes. Meanwhile, oil had a roller coaster day yesterday on the basis of news flow from Saudi Arabia and China's COVID-related curbs. The markets will be looking out for FOMC minutes for cues. According to him, the dollar-INR pair is expected to remain range-bound given the overseas backdrop and is expected to trade in a range of between 81.65 to 81.85 to the dollar.
And on the bonds, Bhaskar Panda says the yields in India have been hovering in tight ranges and will continue to remain range-bound. He expects a 10-year benchmark yield to trade in a range between 7.3 to 7.35%.
Well, we have a lot of stock-specific action to track for you today, and we'll get to that in just a bit in our special Top 10 segment. We're looking at Nykaa, GSPL, GAIL, Decode Remedies, JK